Hi, Tony here. US equity markets dived on Friday as concerns over the conflict in the Middle East fueled worries that higher energy costs and robust economic data could keep inflation sticky and force the Fed to raise rates before year end. While the Trump Z meeting offered a brief glimmer of optimism last week, China has since shown very little interest in helping assist to reopen the Strait of Hormuz, leaving the stalemate firmly in place. Drone attacks overnight have further complicated matters. While Saudi Arabia intercepted its drones, one struck an electrical generator at a nuclear power plant in the UAE. Now, this serves as a pointed warning that renewed strikes on Iran could trigger more proxy assaults on critical Gulf energy infrastructure. Let's take a look at the charts of the NASDAQ and the Dow Jones, as well as NVIDIA before its earnings release on Thursday morning to see how they look at the start of this new week. Okay, so this is the correction we've been tracking since the October high, which culminated in this March low down here at 22,841. And the rally since then has been nothing short of extraordinary. Now, back here on the 16th of April in a Wall Street update, we actually mentioned the possibility or the view that the NASDAQ could hit 27,500 and then push up towards 30,000 before year end. It got to within 1% of that 4 weeks later. So the view that a push to 30,000 was on target, but the timing was very much well out. Now, what we can see here is this pullback on Friday night. And given these overbought readings here, I'd love to see the NASDAQ continue that pullback into the early part of this week. Ideally, we'll come back towards 80,000, potentially back towards 27,000. So the base view that I hold here now is that we have had this extraordinary rally. It's time to work off those overbought readings to rebuild energy for another push higher. So in that sense, I'm looking for a corrective pullback somewhere in this 28,000 to 27,000 area. What I like about this chart is it's also reinforced by what I'm seeing in the NVIDIA chart, which you can see here. Now, as you would know, I love my Elliott wave. You can see here there is a very 5-wave advance playing out in NVIDIA. Here's this 86.62 low back from April last year, and you've got a nice 1, 2. Here's your 3, 4. Here's your 3, 4. This is the A, B, C pullback for wave 4. And then what I think we're seeing currently from this March low is a wave 5, and it's taken us up towards some trend line resistance. You can see where that trend line comes from, all the way back to this $140 high from June 2024. So what I think we're seeing here is potentially the NVIDIA is topping, and that we're going to see a pullback, which should bring it back towards $200, maybe a little bit lower, which fits with that NASDAQ view, which we just spoke about. Finally, today, the Dow Jones. Now, our view has been that the Dow Jones should eventually break above this record high, which it struck here on the 10th of February. The retreat on Friday does open up the possibility that we're seeing a double top of sorts play out. Now, it's not perfect. It hasn't quite got to that 50,512 high, but you can see when we look at NVIDIA, when we look at the NASDAQ, that the leaders are starting to flag. And potentially what this suggests is that this intra-market divergence, i.e. the NASDAQ, the S&P 500, it's not being confirmed by the Dow Jones. So we need to be careful of a pullback playing out here in the Dow. So in summary, while it remains below resistance at 50,200 to 50,500, I think you're going to see a pullback in the Dow Jones as well, potentially back towards 48,800, but with scope back towards this 48,500 support area. So that is how we are seeing the charts at the start of this new week.